So recently, Jerome Powell from the Federal Reserve met with Congress and told them that he plans to increase interest rates again in 2023. And it's left us thinking, well, how is this going to impact commercial real estate values? So what I've done today is I've pulled together a few different data points, and I want to share with you the impact that this may have on the market as we come into the middle of 2023. And I want to start with just kind of outlining that the inflation rate that was last reported came in at 4% year over year. So it has declined considerably, but not to the satisfaction of the Federal Reserve. So instead of leveling off rates and seeing how we're going to fare the rest of 2023, they're making signs and expressing themselves in a way that says that this is actually going to continue and we're going to see some more rate increases. Now, so how does this impact commercial real estate values? Well, in a nutshell, as lending rates go up, the cost to borrow capital to invest in commercial real estate becomes more expensive. And in order to achieve desired returns, the borrower or the investor or the buyer of the property has to pay less for the property in order to make the property meet financial returns that are risk adjusted and make sense. So, as banks are looking at commercial real estate lending, back in April of 2023, there's a senior loan officer survey that was completed, and essentially what the senior loan officer survey says is that banks are becoming tighter on credit. And what this means is they're lowering loan-to-value requirements for borrowers. They are also increasing the spreads that they're charging over the cost of borrowed funds. So for example, if you're in the Boston area and you go to a bank, and in a normal market environment, you would go in and they would refer to the Federal Home Loan Bank of Boston for the daily rate on the cost of funds. The bank goes to the Federal Home Loan Bank, they borrow money, say it's 5-year term money. Today that's at 4.2%. They mark that money up anywhere from 160 to 220 basis points, that's 1.6 to 2.2% over that number, to arrive at a competitive lending rate. So at 4.2%, you might see a rate quoted in the 6.2 to 6.4 to 6.5% range at normally what would be a 75% loan to value. Over the last month or so, as we've seen banking become a little bit more prevalent in the headlines, what we're seeing are banks are becoming more conservative in their lending, as the senior loan officer survey states, and they are now starting to request lower loan to values as well as marking up the interest rates. So what does this mean? If you're calling a bank, typically in this environment you might see loans quoted at say about 6.5%, pushing 7%. I'm now hearing lenders talk about rates in the 8s, the 9s. I've even heard a 10% rate quote. So what does this really mean? What this means is that illiquidity is entering the market, and it's going to likely cause a further slowdown in transaction velocity for the balance of 2023 as borrowed funds become more difficult to obtain, as banks become more rigid about their lending, and that will cause sales in the market to start to take longer. There will be more lag and drag in the market as a result of that. So borrowers with access to cash and capital are going to have the opportunity to pick up some opportunities in the market. There will continue to be buyer activity, but if you are preparing to sell your property, it is very important that your underwriting includes current lending assumptions, not past lending assumptions, even from the last, say, 3 or 4 months. The lending environment is changing rapidly, And so it's important that you're aware of this so that as you go through your commercial real estate valuation exercise, you can see what a typical borrower is going to need. Now, one of the things that you want to look for in your buyer for your property today is making sure that they have a pre-existing banking relationship. This shouldn't be the first loan that they're trying to originate with a bank where they don't have a relationship. Many banks right now will not accept borrowers that they don't have a pre-existing banking relationship with. So that's one thing you want to watch out for if you are preparing to sell your property and you want to get the highest commercial real estate value possible for it. Make sure that your borrower is working with a bank that they have a pre-existing relationship with. That's likely to ensure a higher probability that they'll be able to close and perform on your sale. So, hope this was helpful today. Landscape's continuing to change rapidly here in the commercial real estate market. If you have any questions, you'd like to request a consultation or just schedule a call, you can visit our website at mansardcre.com. Go to the top right corner, click on the Request a Consultation button. There you can contact us, and one of our experts will be in touch with you to schedule a time to review your questions and make sure that you have the information you need to make a smart commercial real estate decision. I'm Jeremy Cyrier. If you like this video, hit the like button and keep watching. You can subscribe to us. We'll keep bringing these updates to you. Take care.